Hi, my name's Warren Fisher. I'm the founder of Manole Capital, and I just want to thank you for providing me with a venue to discuss the opportunity for investors to onboard through Interactive Brokers' hedge fund marketplace directly into the Manole Fintech Fund. So we're looking forward to discussing our value add, our differentiation, and what we believe are advantages. So page 2 just goes over Manole Capital. We're a boutique asset manager located here in Tampa Bay, Florida, home of the Stanley Cup champion Tampa Bay Lightning and the recently crowned Super Bowl champion Tampa Bay Buccaneers. Our hedge fund is called the Manole Fintech Fund, and it's a niche and thematic focused fund. I'm going to try to skip around a little bit in this presentation. Can you go to page 5 for me? So this slide, we call ourselves a hybrid fund, and we are both long and short publicly traded fintech securities. And we also have the ability to own a select number of private fintech companies. So we're a hybrid in both public and private fintech securities. And our publicly traded companies provide us with stability, liquidity, transparency, while many of our private fintech positions offer exceptional long-term growth opportunities. And this hybrid structure provides our clients with unique access to the fintech space. So most, whether it's high net worth individuals, family offices, advisors, most get their fintech exposure through opaque venture capital investments. And unfortunately, these VC investments often come with lengthy lockups and stringent covenants, liquidity restrictions, and some view venture capital like lottery ticket investing, where the upside is large, but the likelihood of success is extremely small. The Manole Fintech Fund provides our clients with fintech exposure, but with better transparency and significantly better liquidity benefits versus traditional VC investing. So our background, a little bit on our investment process and strategy, it really has been built over 25 years of managing assets for clients. We started Manole Capital 6 years ago, actually this week, and that came after 20 years at Goldman Sachs Asset Management, or GSAM. So on the GSAM growth equity team, we managed over $35 billion in assets, primarily for institutional investors, think pension funds, foundations, endowments. And on that GSAM team, I was responsible for covering fintech, which obviously covers both the financial sector as well as the tech sector. Can you go to page 6 in the presentation? Yeah, so this slide simply shows you the 11 sectors of the S&P 500 and each sector's current weight. Tech is the largest weight, financials are the third or fourth largest, and so together tech and financials represent nearly 40% of the S&P. And one of our key points of differentiation is that we are absolutely not diversified, which I realize is somewhat odd to say. We simply aren't terribly diversified. Instead, we run a very concentrated portfolio entirely focused on one niche, and that's the emerging fintech industry. It's our opinion that the market has shifted towards thematic and targeted investing as opposed to generalists. In our mind, why not hire the best of breed in each industry or category? And so at Manole Capital, we are not generalists. We do not own healthcare or energy or materials or utilities or staples or consumer stocks for that matter. But even within the financial sector, we do not own any traditional banks or insurance companies. We avoid all companies that have balance sheet risk or are interest rate sensitive. Within the tech space, we do not own Facebook, Apple, Amazon, Microsoft, Google. So no traditional financials, no traditional tech names. If an investor wants exposure to those specific industries, he or she can easily just own an ETF. And so our primary sales channel are advisors, family offices, where there's often an individual or a team or a CIO that helps to construct a diversified portfolio across multiple sectors or asset classes for their clients. We simply want to be your fintech expert, your fintech manager, and provide you access to the emerging fintech space through the Manole Fintech Fund. Can you go to page 7? So we define fintech as anything utilizing technology to improve an established process. And this is an intentionally broad definition to permit us the latitude to kind of fish in a pretty decent sized pond. FinTech means different things to different managers. In this slide, you'll see the representation of the whole FinTech ecosystem. And for us, the quintessential FinTech business is the payments industry, which is depicted here in the upper right-hand corner of the slide. And we're attracted to many payment businesses as their models and outlook are secular, not cyclical. Many names in our payment industry generate recurring revenue per swipe, if you will. And they equally are able to generate impressive, predictable, sustainable free cash flow. And so while payment businesses are not recession proof, we have found them to be recession resistant. Can you go to slide 10? So even before COVID struck, we were seeing two primary growth drivers for the payment sector. The first was the trend towards e-commerce and away from brick and mortar retailers. This slide shows the total retail sales here in the US and the percentage coming from online versus physical stores. And as you can see, the percentage of online sales is exploding higher. What started at 4.5% a decade ago is now just in the mid-teens. And I don't know about everyone on this webinar today, but if you're anything like my family, we have a package or two outside of our door each and every day, primarily from Amazon. Just the convenience of shopping online seems like a win-win scenario for most consumers, and we expect this trend to continue. The second trend was an increase in digital payments like contactless, QR codes, mobile-based payments, and the steady decline in cash usage. So COVID-19 has accelerated this digital shift as more people felt uncomfortable touching and transacting in dirty paper cash and coins. So this global pandemic kickstarted adoption, pulled forward contactless payments, mobile-based payments, and we believe this pandemic can be the tipping point for a switch towards digital payments. Cash usage continues to fall, but it's a slow and steady decline. Each and every year, our payment companies continue to steal market share from cash, which most investors are surprised to realize that over 80% of global purchase transactions are still done in cash. In some developing and emerging markets, it's still in the low 90% range. But even in developed countries like Japan, sophisticated markets like Japan, it's estimated to be in the 80% cash range. This is what we call winning by breathing investing. So we're trying to capture long-term secular growth opportunities. Can you go to slide 9? Just thought I'd try to give you a better understanding of our process, our strategy, our investment philosophy. So we're bottoms up fundamental research analysts doing proprietary in-depth research and security selection. Our typical day isn't for everyone. We spend the vast majority of our time reading financial statements, building our own proprietary models, writing research, and doing deep dives into the underlying businesses of our holdings. We'd love for you to visit our website at manolecapital.com, take a look at some of our stock-specific pitches, thematic notes, our Gen Z surveys, or even our quarterly investment newsletters. And as this slide shows, our holdings tend to have certain characteristics or traits that we believe are necessary for long-term success. We start by identifying market leaders, companies with durable competitive advantages. We focus on strong, resilient franchises with identifiable growth prospects. We attempt to pinpoint companies that what Warren Buffett has called a moat around their franchise. And we recognize once we recognize that an interesting growth business exists, we try to attempt to understand if it meets our key attributes on this page. So we've found that by owning dominant companies with enduring competitive advantages that also have management teams that rationally allocate our capital, it can lead to success and outperformance, just like we discussed within the payment channel. So in closing, we will state that we've built a specialized niche, long-short fintech equity portfolio with the Manole Fintech Fund. Our hybrid approach is really unique in the marketplace, where we combine publicly traded long-short equity with a handful of private fintech companies. And we believe that provides our investors an entirely different type of growth opportunity. And by specializing in fintech and being experts in this niche, we hope that we can identify and own companies very early in this process, sometimes well before it becomes fully embraced by the market. So if we have time for questions, I'd love to go over that, or if anyone wants to reach me and get our presentation or tear shirt, you could always reach me at warren@manolecapital.com.
Warren, thank you so much. That was really great. Warren's fund actually joined us pretty recently. I want to say towards the end of 2020. I think it's been pretty successful since they've joined the Capital Introduction Program here. They're definitely one of the more unique funds I've encountered. So if anyone has any questions for Warren about his fund, please submit them and I'll start to read them off. Okay. I think one thing I wanted to ask you, Warren, and myself, because people have asked for the last two presentations, is this slide right here talks about blockchain providers, and this one individual has asked the last two funds about their exposure to Bitcoin. So we wanted to know, you spoke mostly about payment businesses in the fintech space, but do you have any exposure to Bitcoin or blockchain companies?
Yeah, so Bitcoin certainly, and digital currencies is certainly in the news recently, with Bitcoin going over 50,000. In order to be a digital currency, or to be a currency for that matter, you need one of two things, and primarily both. You need to be a store of value, and you need to be a medium of exchange, or a mechanism of exchange. We are seeing some companies, Tesla last week announced that they're going to start to accept Bitcoin for the purchase of a Tesla, but Bitcoin and digital currencies really fail to be a medium of exchange. You can't walk into a CVS or a Walgreens or your local grocery store and use Bitcoin to transact at the point of sale. Where Bitcoin is succeeding is really on the store of value side. There's about $12 trillion in money in gold, and Bitcoin at this price is about $750 billion. So as a store of value, it's slowly becoming a digital version of gold. The Manole Fintech Fund primarily owns individual companies. So we like to make fundamental calls on stocks. We do have some modest exposure to the blockchain and to digital currencies, but it's not going to drive our returns. We are really much a bottoms-up fundamental research shop on individual fintech companies. And I just gave the payments example because that's the largest area of exposure for our fund.
Yeah, okay. Good answer. We have a few more questions coming in. Once again, I think you had a slide for this that we might have glanced over. The minimum investment in the AUM of the fund.
Yep. So typically we have a $1 million minimum investment, but since we came onto the Interactive Brokers hedge fund marketplace, we lowered that to $250,000, no lockup, and it's a fairly easy process for new investors to come on board on the first business day of every month.
Great. That's actually someone actually asked about your experience with the Capital Introduction Program since you joined recently. I don't know if you want to talk about that. I definitely wouldn't delve into any specifics, but I guess if you want to give, this is the second time this question's been asked today, if you want to give any brief and
Sure.
details about
Yeah, so we recently joined the marketplace and we're thrilled to be on it. We use Interactive Brokers as our prime, and the process for onboarding clients is actually fairly simple. Interested prospects, clients go into IB's hedge fund marketplace, put in a indicated amount of interest. Once we get that, we'll reach out to that individual. They will send them our sub docs, which are all electronically e-docs, DocuSign, and we go through Tried and Trust as our fund administrator. And on the first business day of every month, we bring on new investors. We brought on one investor 2 months ago, one investor last month, and we already have one from Interactive Brokers lined up for March 1st. So it's a fairly simple process, and we're happy to be on the marketplace.
Yeah, that's great to hear. We had two more questions, and I guess this really speaks more to the hybrid aspect of your funds. This person's asking, how does a fintech firm partner with Manole, I guess they mean a private company when they're asking this question.
Yeah, so we have the ability, like I mentioned, as a hybrid fund to own small states and a handful of private fintech companies. We prefer to own companies very late stage that we hope will be, I don't know, 12 to 24 months from either an IPO or in this market, a SPAC, or getting acquired. We're not really doing early startup companies because we find that they typically will have their hand out for more money on a regular basis. We need all of our companies to generate free cash flow. And in early startups, you're not going to find too many fintech companies that are generating free cash flow. So, we tend to stay much more towards the later stage companies. Actually, the two largest positions in our private book are well-known fintech companies that most people on this call have probably heard of.
That's great to hear. We have one last question before we switch it over. This person wanted to know about the how many positions does a fund hold on average, and what are the typical position sizings? And they also wanted to know if you engage in long and shorts.
Yeah, so we are long and short. We run a fairly low net long exposure. And on our website, as well as on the Interactive Brokers website, you can get our tear sheet, which has monthly performance, top holdings, large exposures. We have roughly, 33 names long, 25 names short. We only do individual stocks, so no indices or benchmarks to create our exposure. Our average long runs in the 3 to 3.5% range, and our average short is 2.2%. And right now, we typically will target a name on the small side about 50 basis points to 1%, and we have no names that are anywhere close to over 10%.
All right. Thanks so much for getting to all these questions. If you guys have anything else to ask to Warren, his contact information can be found here.